Monday, we saw a classic psychological trap, the exact kind that tripped the circuit breakers in 2020. We didn't hit the breakers Monday, but if you panicked and sold your software or payment stocks, you may want to listen closely. A report by Citrini Research went viral Monday morning by predicting a possible 38% market crash, double-digit unemployment, and the destruction of the middle class thanks to AI agents. The market reacted violently. IBM dropped 13%, its worst day in 25 years. Payment stocks and most software stocks all puked. But there's a massive catch. The report explicitly states this isn't a prediction, it's a scenario. It is literally a piece of speculative fiction written from the perspective of June 2028. Does this feeling of impending doom feel familiar? It should. If you were a market participant, think back to exactly how you felt on March 18th, 2020. Bill Ackman calls into CNBC, tears up, and predicts hotel stocks are going to zero. The market was already bleeding, but his televised "hell is coming" served as an additional catalyst that pushed the S&P 500 over the cliff, triggering a circuit breaker while he was speaking. But look at what happened next. The S&P 500 hit its bottom exactly 3 sessions later. Anyone who panicked sold their portfolio because a billionaire told them the world was ending locked in catastrophic losses right at the bottom, and they missed one of the sharpest rallies in stock market history. And what was Ackman actually doing behind the scenes? While retail investors were panic selling Hilton and Starbucks because he said they were going to zero, he covered his short positions, cashing in $2.6 billion worth of profit and using that cash to violently buy the dip on the exact same companies. He bought the bottom while retail was dumping. We're possibly standing at the exact same crossroads right now. Monday, the market dumped solid cash-flowing tech and payment companies like Visa, Mastercard, IBM, ServiceNow, and others over a piece of speculative AI doom fiction. Algorithmic panic took over. And let's be real, if that fictional scenario were to actually play out and we see massive structural unemployment, there are no safer defensive assets to hide in anyway. I'm not saying Citrini Research is doing anything untoward, but don't let a bedtime story shake you out of your strategy. Watch what the smart money does, not what the scary headlines say. Tuesday, we saw some buying across the board, and today after hours, we have NVIDIA reporting. Time will tell who is buying the AI-induced fear.